Hey gang, BA here with the BC Cartel. It is January 2nd, 2021. Hope everybody had a really nice New Year's celebration. Hey, in today's video, kind of want to dovetail into the last video we made, expand just a little bit further, and I want to talk about why I'm much more bullish on Ethereum than Bitcoin. I want to show you some of the tools I use to put context around what I look at, how I interpret that, and then why the long-term narrative is so important for your long-term hodling portfolio. So just to remind you, here we are at the BC Cartel. We're here to help you learn about crypto investing, show you how we trade, and why we're so focused on crypto going forward. This next slide should be no surprise to anybody that's been watching. You know, the narrative that we have is so important on what drives our actions going forward. So number one, we believe that legacy stock market investments and models are dying. Not that they're going to be dead this year, but a decade from now things are going to look different. We believe that Bitcoin will outperform those legacy investments going forward, and we're out to prove that strategies focused on low-cap crypto gems and blockchain tech will absolutely trounce Bitcoin returns. Okay, with that being said, let's get right into it. And we're going to jump right into the charts. So the first chart I want to show you, all charts courtesy of TradingView.com. This chart here is on a weekly time frame, and what we're looking at is a ratio. It's really just a chart comparing Ethereum to Bitcoin. Okay, so most of the charts you look at, the price quotes you get when you look at the price quote of Bitcoin, it's quoted to you for us, Bitcoin against the US dollar, okay, Ethereum against the US dollar, Dogecoin against the US dollar. Those these crypto assets can be paired up against any fiat currency, but for us in the US, that's what we're looking at. But we can change that pair and get a quote on what any cryptocurrency looks like against another cryptocurrency. So here I've just compared Ethereum to the price of Bitcoin. And why is that important? Well, for me as an investor and sometimes as a trader, I want to know what the fastest horse is. So the quickest way to do that is just use a comparison chart. So here we've got Ethereum, BTC up here, which just divides those in the TradingView charting program here. So this again, weekly chart. So this is 2019, 2020, 2021, and then start of the new year. So back in 2019, September, October time frame, this is where I started building my crypto portfolio. And the thesis back then was that Ethereum and Bitcoin should be the foundation of your portfolio. Okay, so check, got that. So the preponderance of the portfolio will be in Bitcoin and Ethereum. But further research and analysis kind of dictated that if you wanted to skew your allocation amongst the two biggest holders in your portfolio, hey, which one's stands a chance of doing better? Well, everything at the time was being proposed to be built on Ethereum's layer 1 versus Bitcoin versus some of the other layer 1 applications. So the more research I did, the more I came to the conclusion that okay, I don't want to not invest in Bitcoin, but for every, say, buck I put into Bitcoin, I'll put $1.50 to $2.25 into Ethereum. So that was my thesis going forward. That's how I built my foundation. That's how I'm doing it today. Anytime I put, $1 worth of accumulated dollars worth of Bitcoin, I'm putting at least $1.50 to $2.25 into Ethereum and Ethereum assets. So the skew I have overall the portfolio is way skewed more toward Ethereum type investments versus Bitcoin. So anyway, so what does the chart tell us? Well, let's zoom in a little bit. We'll go back here so we can see that we made the first higher low here, higher low, higher low, kind of peaked below this one here, but we never took. I always like to look two lows back, held, higher low, higher low, higher low, higher low. So all that's telling you is that Ethereum's price is going up against Bitcoin. Okay, so Bitcoin doesn't mean Bitcoin's going down. It just means that Ethereum is, when they both go up, Ethereum's going up faster than Bitcoin, and when Bitcoin's going down, Ethereum is losing less than Bitcoin. That's kind of what that's telling you right there for a long-term look. We don't have to look any more than, we'll flip over to here to the end of year charts, look at the last 2 years. Bitcoin up 42.59% for the year. Nice return if you were holding Bitcoin the whole year. Year before, Bitcoin was up 349%. Again, two really nice annual returns. You could do very well throughout your 10-20 year investment career if you could just get somewhere in between those two right there. Now let's just take a look at Ethereum. Let's plug ETH in. Alright, last 2 years, Ethereum, remember Bitcoin back here was 42%. Ethereum return for this year was 282%. Alright, so far that trounced Bitcoin's return, so thesis is intact. The year before, remember Bitcoin was what, 242 or something like that. Ethereum was up 624%. So check. First 2 years, thesis is playing out. Thing about long-term narratives and anything in trading, what I've always done is just continue doing what's working until it stops working. That's all you can do. Just rinse, repeat, do the same thing. Continue with the narrative. If you're right, keep pressing it. This is a long-term narrative, so it's not something that is going to shake me up and if something changes next week or so. All right, so let's go back. So summary of this is that thesis was that Ethereum will be stronger than Bitcoin going forward in the future. So far it's played out, so that's the way I'm going to continue skewing my allocations. But again, our view is that Ethereum and Bitcoin should be a foundation for your portfolio. All right, now let's delve into some just Bitcoin analysis because that kind of sets the tone for the overall market. So what we have here is a monthly chart. All of these pretty colors here is a rainbow moving average matrix. I like using this because I'll show you when we get to some lower time frames how useful it is for me. But here you can see it clearly presents breakouts above the noise, and as long as you don't break down, you're in a long-term uptrend on a monthly time frame. So anytime we pull back into this rainbow on the other time frames, and these higher time frames are bullish, these moves back in here are accumulation periods for the long-term narrative. Okay, that's all that means. Don't worry about this right here on the monthly. That's just a momentum indicator. All right, so let's switch down to a weekly time frame. Take a look at that. Let's compress the time a little bit. All right, so we'll go back for the year and just have the year in focus. 2021. Okay, enough instances there. Let's go back a little bit though when we see the first. Yeah, okay, you can see here how things are really tight in the rainbow average. Here at the bottom, those dots turn black. Black and red dots here indicate that a squeeze is taking place, a compression in price. Anytime there is a compression in price, it will uncompress. That is one of the only truisms in markets, is that compressed market prices will unwind and decompress either to the upside or downside. Can't argue that. That will never change. The same as prices will fluctuate. Okay, same thing. Those are two things that will always be true in the marketplace. Here we see we unwound to the upside. We got the when it released, the green turned green, the dots turned green. That meant that the squeeze was over. We closed outside the band, and we've just been going up ever since. Okay. Now mid-year we had that pullback, that correction that lasted. This is a weekly time frame for, so we had a peak here in April, and we didn't really get clear until the last part of July. All right, so we came back down inside the rainbow. This is where I began accumulating a lot of Ethereum, Bitcoin, and multiple times Ethereum, Bitcoin in altcoins back in this area here. So you see I use these bands here once it gets back inside, and if the long-term charts are bullish and my narrative is still bullish, then weekly and daily time frames I'm accumulating back in these bands. Okay, we get a push up, we come back down. I'm always adding to positions on pullbacks on red days to adjust my cost basis in my overall portfolio. So we didn't get much time to add there, about a week, and then we zip back up higher, and we crash back down again from about mid-November, and we're still in the doldrums to this day. So in this area here, what have I been doing? Same thing, adding to positions, adjusting my cost basis. My narrative for the long term is still intact. The monthly charts are still bullish. We haven't even gotten into the rainbow area yet. We'd have to go on Bitcoin all the way a close below 22,000 and some change on a monthly time frame to invalidate this bullish uptrend here. So even though that down move would be really nasty, it would still keep Bitcoin in a pretty bullish formation. So you can see back here in the winters, bear market winters of crypto, that lower end of the spectrum is where you want to be buying at. Probes down, getting around there, you want to be buying on the monthly time frame. Okay, let's go down to a daily time frame. Okay, so scrunching this up. Let me go back to weekly just for a second here, see if there's anything I missed. Oh yeah. All right, we're in a squeeze on a weekly time frame. Dots are black. Okay, you don't need the indicator to tell you that we're compressed. I mean, look, we're trading inside this rectangle right here. Prices are confined. Okay, that's a compression in price. So it's going to be released, whether it's released to the upside or the downside. Nobody knows. Market will dictate that. My bet's to the upside, simply because we're still in a bullish narrative. We're higher low than this one, higher low than this one, higher low than back here. So, until that invalidates it, honestly, for me, until we close underneath this cluster right here on a weekly time frame, my narrative is still intact. So anyway, that's what we're looking at there. Yeah, I think that's all in the weekly. Let's take a look at the daily time frame. All right, yep. Hey, this is the two horizontal dashed red lines, just indicate the box that we're trading in. We've got to close course above the rainbow moving average, above these swing highs here, which are around 51.9 and some change, 52. But we really have to close on a daily basis above this 58.3, close to 54, we'll call it, price point. So it doesn't have to be exact. It's got to close above that area right there, and that should put us in good stead for a move back higher. Here's what's really phenomenal: this downtrend that we drew, right after when we started crashing here. That's when I put the downtrend. So the markets have a funny way of busting through these downward sloping trend lines and then coming back down and doing what we call a bump and run. Well, this one's grinding it down to the downside. So let's go down to an hourly time frame and just show you what I mean. I mean, this is just, you don't think these trend lines are valid? you haven't looked at very many charts before. All right, so here's the first time we probed. We almost went right down to the penny of where that trend line was and bounced. We bounced back up in there, and the reverse is true in down markets. When price gets back up into this and we're still in a downtrend on whatever time frame you're looking at. Time frame is very important. It's got to clear all that clutter. Well, it didn't. It comes back down. Where does it go? It goes right back to the trend line again, closes above it, rallies back again. False breakout, comes back, really gets traders thinking that it's going to break. But I mean, look where it went to. It went right up to its 50 period moving average, collapsed back down, goes right back down to the trend line again, catches it right to the penny, and currently where we're at right now. So we're still in this clustered mess, compressed time zone. Until we clear it, I mean, we're susceptible to more of these. I mean, this thing could careen back down again and go right back down to the trend line. Hey, the trend line's sloping down, so next time it touches it, it's going to be a lower price. All right, so that's so what is this telling me right here? That for my long-term narrative, I'm still in an accumulation zone. That's clear. All I have to do is look at this, accumulate. What am I doing here? Accumulating. What's the long-term chart? The monthly time frame? It's bullish. What's the monthly time frame here? It's bullish, so I'm accumulating. That's as hard as I make it for long-term holding portions of my portfolio. Again, trading is completely different. I still use a lot of this stuff for trading, but the rules are somewhat different to accommodate very, very short-term positions. Okay, so what do we have next? Okay, just a quick look here. Here's Bitcoin with a logarithmic scale. Here we have a very long-term trend line from the inception of Bitcoin, holding up, holding price. And you can see this is the area I'm playing for up in here, anywhere above, say, 105 into the 125 area. It's kind of my sweet spot. If we get a move up into that area, that's where I'm looking at taking my profits for this cycle here. Will it happen? Don't know. It has happened on every other previous move. It's always ended up in the red zone. We haven't gotten there yet. I'm playing for that. Again, as a trader, like I mentioned earlier, I'm going to continue doing everything that's working until it stops working, and then I go back and reassess. So anyway, that's kind of the update right now. And to summarize what we've covered is that, number one, Bitcoin and Ethereum is foundation for my portfolio for long-term holds. My skew in the relationship between Bitcoin and Ethereum is tilted toward Ethereum by a wide margin in what I hold in my long-term portfolio for all the reasons I covered in the video. My narrative longer term is still intact, which is the 5 to 10 year narrative, which is the digital space is going to rule that you're going to have to, in my opinion, start shifting some of your legacy investments in your retirement account, in your longer term stock portfolios, and start adding more digital asset exposure in there. Again, not investment advice, but it's just the way I see it going forward. Hey, appreciate you watching this video, staying with me this long. Just hit the like and subscribe button, and this is BA signing off.